Smart money.
Liquidity.
Smart money.
Manipulation.
Institutions.
Liquidity.
Smart money.
They call it smart money, the moves you never see coming but the entire market. The truth is, big institutions leave behind traces, footprints all hidden in the charts, and today, I'll teach you how to easily spot them. Today, we're breaking down the LuxAlgo Smart Money Concepts Indicator, how it exposes liquidity grabs, order blocks, structure shifts, and how you can use it to trade like professional traders. Now, let's break down the core pillars of smart money concepts. First, we have market structure. This is the blueprint of every trend. Higher highs and higher lows tell you buyers are in control, while lower highs and lower lows show the sellers are. Under market structures, we also have structure shifts, where terms like BOS and CHOCH come into play. ABOS, or break of structure, confirms continuation of the prevailing trend. Price will push beyond a previous high or low in the direction of the trend as seen in the examples. A green BOS will indicate continuation of a bullish trend, while a red BOS will indicate a bearish one. A CHOCH or change of character signals a potential reversal when the market breaks a key structural level against the current trend, hinting the momentum is shifting as seen example on the screen. One thing to note, when the line of either the BOS or CHOCH is solid, it represents a swing structure, and when the line has dashes, it represents an internal structure within a greater prevailing trend. So it's advisable to be keen on whether the line is solid or has dashes instead. Next, we have the order block. Think of them as the footprints left behind by big plays, the zones where major buy or sell orders were placed. They represent the last bullish or bearish candle before a major market move. As you can see in the example, these areas often act as powerful supply or demand levels when price visits these areas. The indicator automatically highlights both internal and swing order blocks, so you can easily spot potential zones of supply and demand. Swing order block structures are often more significant than the internal ones. Then we have fair value gaps, or FVGs. These are small pockets on the chart where price moved too quickly, leaving unfulfilled orders behind. You'll find it interesting that price often revisits these areas and then continues with the previous trend. A bullish FVG is represented by a green box, while a bearish FVG, a red box. You can use FVGS to enter a trade after a valid setup has been formed. We also have areas of equal highs and equal lows in the indicator labeled as EQH and EQL. They often represent areas where liquidity builds up on both sides. They tell you that many traders are seeing the same resistance or support, meaning there's a pool of stop losses just waiting to be triggered. One thing to note is that when these levels are broken, price often reverses sharply, another sign of smart money activity. Now let's add a layer of precision: premium and discount zones. These zones help you identify whether the price is in a premium, overvalued, or discount, undervalued area relative to a range. Institutions tend to sell in premium zones at higher prices and buy in discount zones at lower prices. Then finally, the indicator also lets you display higher time frame highs and lows, for example, daily, weekly, and also monthly on your chart. These levels often act as strong liquidity zones. You can use these with other features like the order block or FVGS for confluence. Now, to the interesting part. How do we use the indicator to trade? Let's begin. We start in the discount zone, the blue area below. This shows us that the price is undervalued, and institutions often look for buy opportunities in such a zone. You can see multiple CHOCHs forming here, signaling that the bearish momentum is slowing down and buyers are starting to take control. Each CHOCH indicates a potential reversal point, a sign that price is shifting. As price pushes upward, we get a break of structure. The BOS confirms the change in direction. The trend has flipped bullish. This move breaks above the previous swing high, establishing a new bullish market structure. Now notice how equal highs, EQH, appear around this region. That's liquidity. Many traders have stop losses above those equal highs, and smart money uses that to fuel their next move. After taking out those equal highs, price retraces back into an order block, the last bearish candle before the bullish impulse. The zone is automatically highlighted by the indicator. That's where institutional buy orders were likely placed. Price taps into that area, collects liquidity, and then rallies upward again, a textbook liquidity grab and continuation. As price pushes higher, we move toward the premium zone, the red shaded region at the top. Here, price is considered overvalued. Institutions typically start taking profits or placing sell orders in these regions. Notice how once price enters the premium area, it forms a CHOCH to the downside. That's our first hint that buyers are losing control and sellers are stepping in. Price then breaks structure to the downside again, a BOS, red, confirming a bearish continuation. This shift completes the market cycle. The LuxAlgo Smart Money Concepts indicator brings structure, clarity, and automation to a complex style of trading. It doesn't replace strategy or risk management, but it helps you see what institutions might be doing in real time. Smart money concepts aren't just theory, they're a map to understanding price behavior at its core. Like and subscribe if you found this breakdown useful, and comment what part of smart money you want me to dive deeper into next.